All right, the pattern. Some of the things that you're struggling with is understand what's happening within the pattern. Understand the traps and how they are set. The spikes to the high, spikes to the low. I'm going to look at some of the charts from last night, but right out of the box, they threw a quick spike right to the low or to the high. And that spike tells you, hey, man, this ain't right. It looks like there's going to become a reversal. Market makers are doing their business. Okay? You need to see what these traps look like after the fact. Homework. I know you're like, oh, Steve, come on, man. I'm the homework. You've been talking about homework since I met you. I hate it. I ain't doing it. I could tell you the people resistant to the homework will eventually come around and do it, and the ones that eventually come around and do it will turn things around for themselves. Okay? Once you identify what a trap looks like, railroad tracks to the low, spike to the high, MW, consolidation, core to wood at the high. These are all the trap moves by the market maker. Core to wood to the high, market maker holds the high, collects contracts, continuation long, reverses the market, and traps the traders. You need to know this stuff in your head, crystal clear, what I'm talking about. If you can't say it as quick as me, whether you're on Diet Coke or not, and understand what the move is, then that's where you're lacking. You need to first think about the process of learning. You need to see it and regurgitate it. Regurgitate the definitions, regurgitate what's going on, and then start to put it into real time without trading. This is a big deal. Okay? I could tell you that a lot of you probably thought, well, since December, it's already coming into April now, I thought I would have this stuff. Think for a minute. 3 months have elapsed since we've been together. I know there was a holiday in there, hanging out and stuff, opening gifts. But think, if you had taken those 3 months and quit worrying about making money so fast, you probably would be well on your way right now. So I encourage you to take some time off absent from trading. What do I mean? I don't mean walk away and throw your computer in the river. I mean not worrying about money, not worrying about win-loss ratios, not worrying about the things that cloud your judgment, and just literally look at the charts for what they are in real time. Try to see, wow, that's a break to the M. Okay, because what happens is the minute you pull the trigger on what you think is an M and it goes against you 10, 15 pips, you start getting knots in your stomach. You're not paying attention. If you have 10 or 15 lots on because you thought for sure this was the M this time, your judgment becomes clear. You have knots in your stomach. You get pissed off. You start cursing me out. You're not really paying attention to what these guys are doing. Okay? And to add to that further, I've talked about this, and no one has sent me the drill. The high-low drill. Okay? What is the high-low drill? Pick your favorite pair. GBP USD, Euro, whatever you like, whatever your platform offers a good spread on, something that you know that once mastered, you will trade it religiously. Your favorite pair, whatever it is. Get in front of that pair at London Open, a little bit before London Open, just outside the blue box, and try to grab the high and low in demo, not real money. And I want you to use a ridiculously tight stop, like 7 pips. Why? Because if you can grab the high or low within 5 to 7 pips of that number, you're going to be a master. Okay, I know that James Schwab does that. He's done it. He can grab the high or low like nobody that I know, or maybe you guys have been quiet about it. Except I got to give it to Granny. She nailed it on that reversal on the railroad tracks. But anyway, what I'm saying is that understand the traps and how they're set. Everyone knows Sunday night they use the gap. They make the trap, right? They fake to the high, fake to the low, take in the breakout traders at the London Open. They trap on Friday going into the weekend. End of day, end of session. Those are the things. Now, try to identify that. And I'm going to add some timings tonight that will hopefully clean it up for you a little bit. But that's the first part of the pattern is there. It's there every day. It's there at least a couple of times a week strong in 8, 9 pairs at one shot. Okay, it's in there. Now that it's in there, break the pattern into pieces. Okay, we know the consolidation accumulation phase, the 3 swipes to the high, or if the ADR is in the picture, if the blueberry's in the picture, if there's mayonnaise hanging around. Okay, if you got some watered down mayonnaise where the 50 crosses the 200 and then a piece of blueberry pie falls in, if those numbers are coming together, you can bet that they're going to try to cross those with a spike, railroad track, or some type of half a Batman formation or something. Why? Because there's a lot of people out there that trade the crossovers. I've said this 100 times, but with that in mind, look for the big spike past that to get the close above, and then immediately look for the reversal. Don't fall into the sucker traps. Okay? So once you identify these patterns over and over and over again, try to identify them in real time, absent of putting money on, absent of trading even demo. Just study the chart for what it is in real time. Then after that, try to add demo trades doing the high-low drill. Open up yourself a $100,000 demo, do one standard lot in GBP USD, and try to grab the high of that pair for a couple of weeks in a row without fail. Try to grab the low of that pair a couple of weeks in a row without fail. Several things are going to happen. You're going to notice the speed of the candles. Okay, the speed of the candles is very important. That's why I hate the simulator. Told you guys that. The simulator is crap. Why? Because the simulator moves all the candles in one speed. Okay? There is no substitute for real time. I want you to observe the spike, or what we call vector. I'll give you the definition of that in a minute. The spike of the candle moving at a certain velocity and speed, which is the stop hunt, and then the trend move, which is slow and steady, that moves back and forth and chops and tries to scare the good traders out of the market. Okay, remember, no trade, or the trade is valid as long as the high or low which you traded off of remains intact. That's it. If you take a long and they come near the level and it scares you and you scratch yourself out, that's okay. But if the high or low holds, don't be afraid to get back in and go again. I think that happened to Kirk last night. He sent me an email. I don't know if I recognize him or not. But Kirk's doing a lot better. He had a breakthrough in the class, and he's doing better. He came out to L.A. But while I'm on the subject about this, let me back up. Here's the reason why you need a couple of classes with me. The first class, I know I suck. I don't give you a book. Can't believe you won't put something in print. You're a jerk. I know all that stuff. The first class, you spend most of the time taking notes. Then you go home in a fog. And you're like, what the hell does this guy talk about? The high-low bullshit. I don't know about this guy. He's a nut job, right? The next class you come in, you don't need to take notes. You take your notes with you, and you highlight certain things. You made your own textbook now. Now you bring your notes to the next class, and you go through and you clean them up and say, oh, that's what he meant on this point. I couldn't read my own writing. It was 11 o'clock at night, and the guy wouldn't shut the hell up, jacked up on a half a case of Diet Coke and 3 pitchers in the corner. Now I understood what he meant. I was tired. Now you clean up your notes. And I noticed the people that have been with me 3 or 4 times on the last class, they just sit there and enjoy the party. They hang out, they commingle with everyone else, and they just hang around because the notes are done, written, and clean. They've studied them. They had some chart time. Now they just try to absorb and let maybe something new hit them that they didn't catch the first or second time. That is why retakes are free, okay? I'm trying to do more stuff on the web. As you know, Zen mentioned we have some upcoming venues. But I want everyone to try to attend, all right? I want you to be there in person. There's something about doing it live versus on the web that I promise you is a lot more fun. And we had a great time in L.A. and a lot of people, there's a lot of success in there to feel that energy in the room. And, I mean, it's crazy to me. Like, you know, when I started this, it was a hobby. I was screwing around. You know, I was like, my wife's like, what are you going to do with yourself? Like, I don't know. What am I going to do? Well, you want to buy that franchise from OTA? What do you want to do? I don't know. Okay, I didn't know what the hell I was going to do with myself. This business turned out to be something unbelievable that gives me a great deal of satisfaction. Helping other people and seeing the success and seeing grown people cry. Having somebody kiss my feet. I told you guys the story. It's crazy stuff, and I almost feel like I'm not worthy of all this great accolades. It's amazing. It's almost as good a feeling as witnessing the birth of my son, man. I know it's crazy, but I love helping you guys. I want everyone to have success. It's a true and genuine want and desire for you guys to be successful. Okay, so don't turn your back. Don't give up. You're in the right place. You just need some repetition, and something else will resonate with you maybe the next time you sit in front of me. Okay, so with that said, this is what I'm talking about. Look at these little baby candles. All of a sudden you get these 2 big, fat railroad tracks. Anyone could step back from the thing, take the box off the chart, and stare at that and go, that ain't right, man. Something's wrong with that. That thing's going to reverse. And even if you waited 15 more minutes for the hammer to paint and entered on the close of that hammer, you're still in pretty good proximity of the close of the green return candle, right? And then you're right back to the watermark, 50 pips, game over. But notice how they throw the spike on the green candle up and down about an hour in to clean out the stops of the weak short players and the weak long players in both directions. Why didn't you get out of that trade? Because the low of the day below the railroad tracks held the trade is still valid no matter what. And then sure enough, an hour later, you get the spike right to the watermark. There's your target, game over. All right? Identify what vector is. Vector is an engineering term. Some people said I was too simple, I wasn't technical enough. Nah, I got a fancy word for you. How about that? Vector simply means magnitude, length, and direction. How the candle comes out. It's an aggressive move. Okay? Vector is when the box is quiet and all of a sudden at 3:30 it spikes to the high or spikes to the low. Did anybody see that in the candles last night? It was everywhere. And it was a simple grab to make money. Okay? Vector is usually the stop hunt. Okay? It starts an aggressive move, 2 to 3 candles. Why 3 candles, Steve? 1, 2, 3 to the low to convince you to take the break short. The problem is, and like last night, it can be one big monster 15-minute candle where they pump it 3 times. And hidden inside that candle would be 3 5-minute candles pumping to the low. Do you need to switch over and look at that? No, you don't. Understand what it is. It's an aggressive move out of the box. And most of the time, it's the stop hunt. Okay? Vector also is present during news. All right. I know I'm jacked up. I feel good. Am I going too fast? Anybody? Yes, I am. No? Okay. All right. Look at this pattern. Look at this chart. Step back and look at this chart. Don't you see the consolidation? Don't you see vector? Don't you see 2 big candles spike to the low? Those 2, wouldn't they be a monster outside bar? The one's an outside bar by itself, but the structure together of the 2 candles spiking to the low and ending on the pin, the stop hunt will almost always, with the exception of railroad tracks, end on a pin. In railroad tracks, the green return candle or the red return candle, as the case may be, is representative of what the spike would be. All right, does everyone follow me on that? If you have a spike, like look at this bar that's showing there, spike to the low, right? If that bar closed at the bottom and then they reversed immediately in green and pulled it out, it's just a matter of clock time. When they spike the low, the candle just happened to close, and then the opening candle, because it's a new candle, can only show green. But what that is essentially is that this candle closed within the time constraint of the 15-minute window to make the spike, where it looks like, you know, you pulled your pant leg up and your skinny bony legs are showing. That's the spike to the low, right? A railroad track happens to close right at the mark, and then the green candle is representative of the spike. Those 2 candles together in railroad tracks are the same thing of this as this candle would look. And on a 1-hour chart, those 30-minute candles where railroad tracks go in would essentially become a spike. Okay, now, look at the spike to the low. Look what happened. There's vector right out of the box. Bam, 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 right to the low, pull it back. They go into consolidation off of the low, but fail to break the low. Market makers are trading off of the low. Okay, I've heard a lot of you struggle with this. If they're trading off of the low, it's a long. If they're trading off of the high that just formed, it's a short. It's not, oh, I'm confused, I don't understand. Remember, the chart is the footprint of where they've been. They already went there. The damage is done. When you see it on the chart, the damage is done. They got what they needed. When they snatch that away and the spike prints, there's hundreds of thousands, probably millions upon millions of dollars stuck down there now. You see the footprint and go, man, that ain't right. That's a spike to the low. Steve told me those are reversal patterns. Okay? Look at this pattern. Consolidation overnight. Vector, spike to the low, pull away, consolidate for how long? I need my guy from California that verifies my time. 1, 2, 3, 4, 5, 6, hour and a half after they spike to the low of consolidation. You need to deal anywhere in the consolidation zone for a long. That's it. First target water, second target Mayo. Okay, that's what you're looking for. That's what a spike to the low or spike to the high looks like. Understand that. Okay, now I can't get the slides to change. There we go. Okay, look. Tiny baby candles, consolidation. A quick 3-move spike to the high, variation on the theme. Hit it, hold it, hit it again with an evening star formation and reverse. Okay, vector, out of the box, high to the high. They hold the high for about 30 to 45 minutes. and then they reverse. Okay, so when you see this and they pull away, the damage is done. Market makers have trapped what they needed at the high and at the low. So now, take the chart out of the equation. Let's talk about the board. Okay? Let's talk about the board. If you were watching the high-low board, Scott, if you're here, this is for you, buddy. He loves the high-low board. Okay. Think about what just happened. They hit the high on the board in 3 swipes. The number is now locked. Whatever it is, 140.16, whatever the number is. They hold 140.16. They pull away from 140.16 by 10 to 20 pips, 25 pips, depending on the pair. They create the middle part of the M or W formation, the 2-point. When they go back towards the high but fail to break it, that is where your hammer will show. If they break it, if they extend the high one more time on the second leg, your job is to see how that closes. Now, if they spike to that high and pull back and close below, that was a tap to trigger the stops. That is not the true high. The true high was already formed. That was a stop on after the high as a trap move. The same thing goes for the low. Okay? Now, if you take that pattern and add some timings to it, which I'll talk about, it becomes a Brinks truck trade, solid gold. Okay? All right, so here's the litmus test. You have a checklist, but let's just be a little more casual about it. Okay? Higher or lower than the blue box? This is the questions you got to ask yourself. Did I just see this right? It needs to be 25 to 50 pips above or below the blue box. Simple. Why? Last night they did it in 1 candle. Sometimes they do it in 2 or 3 candles. Was it aggressive or fast? Vector. Did they come out of that thing with velocity and speed and movement? Okay, then all of a sudden, did it hit a wall or stall out? Did price just all of a sudden just stop moving like there was a brick wall at the bottom? Did they come back to the level? Did they come back like a brick wall, hit it again, couldn't break it? Did they come back to the level and not take it out, break it, whatever the hell you want to call it? When that is present, that tells you that something's going on. Okay? Now, very important. I've talked about this. Some of you see this on your dealers. Some of you do not. I believe this is more visible by ECN dealers. Was the spread widened at the stall point? When price came near the low or near the high and held there, did they open the spread just past the other side? Also, if the blue tracer is present, mayonnaise is present, mustard is present, ketchup, water, some other target mark, a pivot point, ADR high, low, you're going to notice that they'll spike past there or open the spread past there to absorb the orders of the people that put pendings on either side of those or straddle those, right? So now, if you happen to notice the spread is open a little bit, that will give you a deeper understanding that these guys went right down to that damn low. Even though the trend is down, it's not a continuation pattern. It's a holding pattern to grab those contracts on the other side of that brick wall without letting the other traders see a profit. By opening the spread, that is their weapon, they leave one side of the trade trapped. They open and grab the orders from the other side of the trade. The pendings, okay? That's what's going on there. So you got to ask yourself, the litmus test, higher or lower than the blue box, 25 to 50 pips. Did the move come out and demonstrate vector, fast, aggressive? Did it stall out all of a sudden? Why, if this is the real move, did it's almost like the brakes were put on? That ain't right, man. That don't look right. That's going to reverse. Did it price almost go straight up to a point and hit a wall? And all of a sudden it turns into a quarter wood, sideways movement. What the hell? It went up to 41.22 and couldn't move another pip. That ain't right. Look for the reversal. All right, now, did they come back near the level a couple of times? Maybe didn't break it once, twice, 3 times? That's a reversal, man. And then how do they handle the spread? How they handle the spread, again, is a footprint or telltale sign that they're giving it away to us, what they're doing. They open the spread, you know, this is the high of the day. It passed the litmus test. It's 25 to 50 pips higher. It came out with vector. Now they're opening the spread. At this price point, I know they're working the contracts. I got it. I got it. These guys got them. I know what they're doing now. I got it. Okay? This is what I mean. Out of the blue box. Look at the pins right to yesterday's low. Look at them. Look at the second leg of the pin. Man, just enough to put the bid and the ask over the side of the blue line and open it up and grab any order sitting there. Think about that. This is what you're looking at. This is the footprint of what the hell they're doing. They came out of the box with vector aggressive straight down, fell off of a cliff straight down. They pulled away quickly near the low, went into consolidation for how long? Where's my guy? Verify the time. 1, 2, 3, 4, 5, 6, right? Hour and a half? Didn't I tell you 30 to 90 minutes in class? 30 to 90 minutes, they work the area. Why? I don't know why. That's just what they do. It takes 30 to 90 minutes to get all the suckers to jump on. Because people are impatient. They want to hurry up and make money. They got to pay the rent. They don't understand the bigger picture. This is the big picture. They came out of the box, 45-pip box, by the way. They made an aggressive move past the mayonnaise. They got everybody short. They had traders trapped at yesterday's low, blue tracer. They just missed it on the first pull, snatched it back, went into consolidation for 90 minutes, hit it again. The second leg taps the low of the day again by 3 to 5 pips, enough to absorb the pendings and trigger the stops of the people that got it right the first time. Some people got that as a long. But they came right back on the second leg and nailed them. Now they're out, standing aside. What do they tell you to do when you get stopped out? Stand aside. Well, if you stood aside, you missed 1, 2, 3, 4, 5 green bars straight up to the watermark. There's your 50, 60 pips for the day. Okay? That's the difference between an amateur and a professional. You understand the bigger picture, and you don't freak out when you get stopped out or cry or crawl up in a ball or go back to sleep because it's 3 in the morning. Because you understand the big picture. If your stop was tight enough where that spike on the second leg got you, but you had the perseverance to understand and get back in, because you understand the market, you approach it with a calmness, because your aha moment occurred, and you see, wow, I understand what this guy's talking about. He's not that loony after all. There is something going on here. This market is rigged. It is a bunch of bullshit, and I can trade it now. That's what I want you to understand. It's not, oh, I got to make picks, I got to make pips, my rent is due, my car payment's due, oh my God, I got to hurry. If you're working under that, guys, I'm sorry, but you're going to have a much harder time than a person that maybe has a job and is taking his time and not having financial pressures on him and trying to learn the bigger picture. This is not, listen, it takes 4 years, 8 years to be a doctor. It takes 6 years to be an attorney, to go work 9 to 5 in a suit all day. You have something at your feet that will reward you 10 times more than them. I can't tell you how many doctors and lawyers want to do what we do, approach me and come up to me and ask me, man, can you teach me to do this? It's crazy. Okay? Understand you have something at your feet. You think you're going to walk out of my class in 6 days and go home and be a master if you haven't even sent me one lick of homework? Of course not. You got to put some time in. But I promise you, this is not some bullshit MACD dot crossover system that everyone teaches trying to figure this business out. I'm showing you the truth in the marketplace. And if you take the time and roll up your sleeves and understand what's going on here, you will be successful, period. End of conversation. I always joke around and say, oh, you lost money last night, you lost money on this, you spent money on this, that it ends tonight, it ends here. That stuff can end in your life if you're sick of it, if you've had enough. Okay? If you're ready to roll up your sleeves and make the commitment, I'm trying to put the things in place to get everybody to the next level. But understand, I'm one dude, and when I go out to a class and teach, I come home, I'm drained, man. You guys wear the hell out of me out. And I love it. I enjoy the hell out of it. But I need a couple days to decompress or to decompose. Seinfeld episode. I need to come home and decompose for a few days and just feel better and get my energy back. Because I don't know if you guys noticed, but I never sit down when I teach. And right now I'm pacing around my bedroom. Okay, I never sit down. I never take a break. I am devoted to getting this information into your stubborn, hard, thick skulls and get you to see what's going on here. So I want what's best for everybody. And this other stuff about, oh, we need a room, we need somebody pointing to M's and W's and all that. You guys can talk about it all you want, intimidate me. It's never going to happen. What I want for you guys is to be independent of me, because I don't want to bail out of here and say, I left everyone hanging, I closed the room down, and nobody can learn anything now. I want you to get this without me. I want you to take your laptop and go to Tahiti and open it up and go, there's an M, I made $5,000, see you later, thank you, Steve. That's what I want for everyone. I want you to master this on your own. Everyone's learning curve is different, but you have to get the bigger picture and understand what these guys are doing to have the success. Okay, look, spike to the low, railroad track, right past the mustard, they come right back. Okay, this is a typical pattern. This is what we saw. Outside bar, spike to the low. They come right out. There's vector. Right? 1, 2, 3 to the low. They end on a hammer. Consolidate for how long? Where's my verifier? 1, 2, 3, 4, 5, 6, 7. Hour, what is that? Hour and 45 minutes. And then they make the shift the zone candle off the low. They stutter at the watermark. Notice that? They stutter at the watermark. Why? The stuttering also helps us see the levels, but the stuttering is for all the people that trade a break or a bounce or off of the 50. Those little stutter marks or those things on the averages, that happens because most of the retail traders try to play those. And they don't know what they're doing. That's why market makers go back and forth at those marks. If you caught the low of the day and it's a run day where they're going to trend, this is no sweat, man. If you caught the spike to the low right out of the box, 43 pip channel, minimum target's the mayonnaise. Just look how close the watermark is, right? Then they make the next move. Look what they do. They throw a spike right past the mayonnaise and then come back and then break it anyway 30 minutes later. That is on purpose. That is to scare people out. If you're looking at a 5-minute chart, the last 5-minute bar of that 15-minute candle is inverted red. Look at the wick on that. What did that do? It showed people on a 5-minute chart resistance at the 200 sell, and then they turn around and stop them out anyway. That's what's going on there. Okay? And then you're looking for the reversal inside the red box. Somebody posted a trade. I can't remember who it is, and it's probably better I don't embarrass them. But he took an M or a W and got stopped out and said, I don't understand. What the hell's wrong with this? He was looking for the reversal in the middle of the run. Price hadn't even made a stutter yet, and he got it long or short, and he was waiting for it to stop. He was like jumping in front of a falling knife. When those two candles come out of there red, you don't know if they're going to consolidate for 1 or 2 bars and then hit it again. You wait for the consolidation. The consolidation is the sign into the session that you have got the high or low of the day. Notice how they come vector right out of the box. They throw the hammer at the low and pull away from the low. Now they're consolidating a safe distance away from the low. Why do they do that? Because there's traders stuck down on the aggregate all the way down past that pin, all the way down. They got them now. For them to go back and repeat the level releases that trader, right? Now, notice in the TDI on this, there's divergence. The price, the consolidation is occurring straight across as a cord of wood, but TDI is catching it and going, that's trading a little higher, closing a little higher, closing a little higher. TDI is going, ha-ha, that's a W, I got you guys. You're in consolidation, but you're averaging higher closes to trap the traders at the lower levels, and then you're going to shift the zone. It's going to be game over for those guys. And sure enough, 90 minutes later, one big fat green swipe, they trap all the shorts that are trend following stuck at the bottom. Okay? This is what I mean by learn how to identify these traps. First, in hindsight, then in real time in foresight with no money involved, and then try to catch the high-low drill to start catching these numbers. Quarter wood sideways variation on the theme. Spikes to the low. The first red bar after vector, they hit it high, hit it low, drop it out. Tap the low one more time, end on a hammer. Clean them out both directions with railroad tracks. Hang around for 30 more minutes, shift the zone, it's over. Notice the W and the mustard behind the price action. Okay, look at that. Remember I said it looks like it hit a wall? That, my friend, is a wall. That's what a wall looks like. Okay? Why not, in your trading, when you think something's the low, draw a straight line right at the bottom of that hammer. Use the horizontal line drawing tool, line it up with the bottom of that hammer, and see what happens. Okay? Try that. Part of the drill. Put a horizontal line at the bottom of the hammer. You can put a vertical line through the hammer itself. Mark your little box. And watch how market makers behave. Look what they did. They went down, missed it. Went down, tapped it. Went down, tapped it, pulled away. Hung around. Well, we got some people that went long. We'll show them. Issue another hammer. Clear the stops. Pick up any pendings that are laying around that are short in there. And then we shift the zone in one bar off of the low. Understand, that is what a wall looks like in the business. It's a price that they keep repeating, but only changed by a pip or two. Every time they went down there and tapped it, in this example, the high-low board, the low could have changed by a pip or two, as much as 5. Why? Because people are using tight stops in that area to try to grab them. They have to open the spread. When they open the spread, subsequently the low board will change by a couple of pips. Okay? So if you look at the second approach on the green candle, they hit it just slightly lower than the hammer, right? The high-low board changed. The low was extended by a pip or two. Let's just say 5 pips. Now they come back with the next one, the red candle that ends in a pin. Think about what happened. They hit it again, and it looks to me like it's just slightly lower, but if they open the spread, that will tap the low again. It's how they handle the high and low that helps you determine if this is the wall or not. The low was never broken on this, right? They hung around there for how long? Verification? Here we go. 1, 2, 3, 4, 5, 6, 7, 8. 2 hours. Then you get your shift zone. If you entered that trade on the second pin to the low that closed up, you would be in the safe trading zone window for time. If you traded on the third hammer, you would be in profit in 30 to 45 minutes. Okay? Hope you guys are seeing this stuff. All right. Remember this? There's a chart that I show you guys in class. It's black, and it shows you the 3 levels. And I know in California for sure, and in Toronto, I said, remember this chart. It's going to come up again. The pattern, the pattern, the pattern. These guys only have a limited amount of tricks. There's only so many things that they can do. Keep that in mind. Okay, so you remember I told you it's going to come up again? I want you to pay particular attention to the low on this chart, all right? Remember this? You guys remember this, right? Look, 1, 2, 3 to the low. They use the news to complete the pattern. And then you got a spike. There's your wall. It looks like it hit a wall. Notice how RSI picked up the divergence, each subsequent spike to the low. Okay? It happened again in GBP-CHF back in February. Look over here in this corner. Here's level 3 after a big news spike. Then look, hit a wall. Hit a wall to end the day. The next night at the Asian session, it hit a wall. And again at the London Open, it hit a wall and threw a hammer. Okay? It happened again last night. This is from last night. I had to use a 30-minute chart to drag it in because it's spread out over 3 days, and I couldn't get a snapshot of it on the screen. Even on a big 27-inch screen, I couldn't get a snapshot of it. I had to drag it in on a 30-minute chart. But the point is, look at the high-low tracer from the previous days. It barely moved by a couple of pips. Does everyone see that? Look at that. They hit it. It made the tracer for the next day. Look how the spike right past yesterday's low to grab those traders and grab them up. Okay? Then the next night, Vector spiked right down to it. An aggressive move. Notice how this aggressive move at the London Open looks very similar to how they ended the day. When did the trap moves? Steve. End of the day. Session changeover. End of the week. Okay? Does everyone see that? When you see it hit a wall like this and they come back and repeat the level the next night and they repeat the level again, something very interesting I didn't draw. Look at this monster divergence. Have you ever seen 3 days divergence? Look at that. Starts here. Imagine a line all the way like this going up, right? TDI said, I ain't falling for that bullshit. Those guys are going down there, but they're averaging higher closes. I'm too smart for this. I know better. I took Steve's class. I'm a smart TDI. I'm making higher closes, but price is repeating the same level and failing to break it or just barely tapping it. Just barely tapping it to absorb the pendings and get the trend continuation suckers short. Right? That's what's going on here. Okay, so last night, as soon as you seen them go spike right down to yesterday's low, you could have entered the trade and grabbed 50 pips in your sleep. Okay? Look at that. That's the pattern. Isn't that this variation on the theme? Isn't that this variation on the theme? Look at how the averages are fanned out, boom, boom, boom to the low. Right? A big aggressive move. Averages are fanned out, boom, boom, boom to the low 3 times. All right, do you have to make me say it one more time? All right, you guys awake out there? Boom, boom, boom to the low. I feel like an idiot. All right, look what's going on. And notice on the third day how there's the blue tracer. That's yesterday's low. They threw the pin just past it again. And happens to coincide with shark fin low. Okay, there's no mayonnaise there. That's shark fin low held by the light blue tracer. The light blue tracer is showing you that market makers have enough volume trapped at the lower level on aggregate that they got everything they need. They hit it again, open the spread. Hit it again, open the spread. 4 suckers that are short because Naturally, price has been dropping for, look how many days? Anyone? 1, 2, 3. Do we know the trend is down? From textbook we do. There's the mayonnaise. There's the water. There's ketchup and mustard. We have a 250 crossing the 200. Angle and separation. Every book I ever read tells you angle and separation denotes momentum in a trend. So if you see that and you're stupid, or you're a retail trader, one of the two, I didn't mean to call anybody stupid, but if you see that and you're a retail trader, what's the thing they say in the book to do? Sell the rallies in a downtrend. So people shorted those and got slaughtered. Okay? They have people trapped at the lower levels. They repeat the level 3 times, or they hit the level, repeat it 2 more times, hold consolidation for an extended period of time. Why? When they lose interest in a cross and it doesn't move for a couple days, then the answer is they're working the other crosses in the majors. So if GBP CHF holds a level, the action's in the pound and maybe in the Swissy. Okay? All right, man, I got a big mouth. I didn't know it was 10. How about a 5-minute break, and I'll finish my slides, a real quick bathroom break. It's been 1 hour, and then I'll turn it over to Carr. All right, let's break. 5 minutes starting